Three stocks to avoid in 2025. Number 1, IONQ. Quantum computing company IONQ has had a terrific few months. Since the start of October, shares have gone up 500%, taking the company's market valuation to over 10 billion. Excitement over quantum computing continues to build, and IONQ has announced a number of important partnerships with companies like AstraZeneca and Ansys, as well as organizations like the University of Maryland and the United States Air Force Research Lab. IONQ computing is now available on the big three cloud platforms Azure, Google Cloud and AWS. Revenues have almost doubled this year and are expected to double again in 2025. The problem for investors, however, is the valuation. IONQ reports only $38 million of revenue over the last 12 months, which means the company is currently being valued at 275 times sales. Much of that revenue comes from government contracts to provide future hardware. Most importantly, the company is nowhere near profitable. Net income was negative $172 million over the last 12 months, with minus $114 million of free cash flow. Both of those figures have got worse this year, and IONQ management has not provided any meaningful timeline for when the company will be able to turn profitable. Introduce competition from the likes of Google, IBM, PsiQuantum and many others, and IONQ can only be seen as a highly speculative investment. Number 2, SOUN AI. SOUN sells software that's used for AI voice recognition, and the stock has gained over 1,000% in 2024. Those gains have come as investors have responded to the company's expansion into drive-through restaurants. With roughly 200,000 drive-thrus in the US, the opportunity does look attractive for SOUN, but it's not yet clear if the company will be able to capture all of it. SOUN's historical performance in the automotive market doesn't look all that impressive. What's interesting is that SOUN had virtually no exposure to the restaurant industry before its acquisition of Sync3 for $25 million. That led to the capture of some 10,000 drive-thrus overnight, and it's not the only acquisition that SOUN has executed this year. SOUN's reliance on acquisitions to fuel growth raises questions about the company's technology, and at the current valuation there is a lot that could go wrong. The business trades at 134 times revenue and has burned $90 million of cash over the past 12 months. That kind of performance can't continue for long because the company only has $135 million of cash and investments on its balance sheet. Number 3, MicroStrategy. As of December 23rd, Bitcoin investment company MicroStrategy owned 444,262 Bitcoins. With Bitcoin trading around $95,000, that puts MicroStrategy's stash at $42.3 billion, while MicroStrategy, the company, is valued at over $80 billion. That premium reflects the company's ability to strategically stockpile Bitcoin. MicroStrategy finances its Bitcoin purchases by raising debt and selling stock. The higher Bitcoin goes, the easier it is for MicroStrategy to sell shares to buy more Bitcoin. Those purchases then support the Bitcoin price. It's a feedback loop that CEO Michael Saylor calls Bitcoin yield. Others, however, call it a Ponzi scheme. Bitcoin could keep going up with the incoming US government. However, Bitcoin's volatile price movements suggest the cryptocurrency is also tied to risk. When risk appetite is high, Bitcoin tends to go up. When risk comes back, like in 2022, Bitcoin falls. This suggests that Bitcoin is subject to the same laws of supply and demand as every other asset out there, and at some point that will be a problem for MicroStrategy. MicroStrategy's Bitcoins were bought at an average cost of $62,257. So if Bitcoin falls just a little bit, the house of cards could come crashing down. So those are 3 stocks to avoid in 2025, but these are my personal opinions, not financial advice, and I hold no position in any of these companies. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.